This is Josh Appleman, founder and CEO of Appleman Properties. Today we're joined with James. James is an acclaimed multifamily operator with over $517 million in investments, author, podcast host, and CCIM designee, known for creating investor millionaires. James, we're excited to have you on the show today. If you could let the listeners know a little bit more about yourself.
Sure, Josh. Happy to be here. I mean, I didn't come on a podcast for almost 6 months now. Before that was a lot of podcasts around when when market hype was really high, I guess, right? So appreciate you having me on podcast this time around. So myself, I'm an electrical engineer. Used to be electrical engineer. I'm still an engineer, the way we think. And an MBA within a CCIM, and been in real estate for past 10 years. Starting 2013, we started single family space, flipping rentals. So we started with 13 houses. Then after 13 houses, we went to first 45 units, and after that went to many other multifamilies. The biggest being 346 units.
Nice.
And we had almost up to like 3,000 units last year. We sold half of it last year at the peak of the market. So hindsight 2020 is a genius move at that point of time, right? Even now, right now, I mean, a lot of people right now, market is down, and a lot of deals are struggling. Anyway, so we have moved a lot into ground up construction. We still own like almost 1,500 units now. We have 7 assets, but we have moved into ground up construction. We're doing currently we are going vertical on a 324 units apartment in San Antonio, which is almost like an $80 million deal. And we are going to be going vertical next year, mid of next year, on a couple of deals as well in Austin, Texas. And we are just going more into class A's and ground up construction, but we still love the value add space, and we are experts at value add.
That's huge. And you started out exactly um, I think you would expect to start out just single family house, and then
Hmm.
now you've got a massive portfolio. You've made a massive exit.
Yeah.
What if you could tell us a transition between the single family space and then what made you get into multifamily and then scale from there?
Sure, sure, sure. So let me start from a W-2 employee space, I guess, right? Because as an employee, you think differently compared to an entrepreneur. But I've been always been an entrepreneur at heart. When I was in college, I was selling T-shirts to my college mates. I was selling workbooks to students. I was always selling something, right? Even though while I was working, I never understood entrepreneurship. So if you have, if the listeners, any of them out there see their kids doing some entrepreneurship work, think that they have some natural instinct there to become an entrepreneur. So as a W-2 employee, you get a fixed income, but I always wonder, how to make second income, because we just moved to the US like in 2010, and I didn't realize the cost of education here, and I have 3 kids. And once I got to know about the cost of education, I said, "Oh my God, my job is not enough." Even though I was like a senior executive at one of the largest semiconductor company, I was thinking, "Oh my God, I just started in the US. I don't have any retirement, and how do I, you know, uh, how do I fund my kids' education?" So I have to do a second income, right? That's where I realized that it's better for me to do some business. So we tried a startup of a software company. We tried a lot of things. Ended up we realized that we always been good at real estate, because back home when we came from Malaysia, back home in Malaysia we were doing small house flips and all that, and we were always been making a lot of money there. Um, so we realized, hey, let's do real estate, and I met a friend in my workplace where he said, "Hey, you can buy rentals here and get 9% return." I said, "Wow, 9%! That's pretty good, right?" So that's where I started buying rentals and flipping them. So we first 13 houses we did in 2 years, 2013 to 2015. After that, we moved to multifamily. So the transition has been like, yeah, single family is great. You own everything. It's easy to find single family, but it's hard to scale, right? Because now you are limited by 10 houses if you're per person, right? On terms of government backed funding for single family houses, right? At the same time, I have to make sure that I'm able to scale, right? So that's why multifamily came. So multifamily helped us to scale, make it into more of a business. We are still vertically integrated property management company. So we do everything. We do raising money, we do asset management, we do property management all by ourselves, and we have learned a
Nice.
lot of it, and we have become really good at it.
That your story gets even deeper because you moved to the U.S. and you had a totally new environment, atmosphere, starting essentially not with a new company, but as a new job because
Hmm.
you're learning all of your new colleagues area, and then on top of that, you're starting. You found out that you needed to get into something else to subsidize your income, and you essentially started from scratch with real estate in a whole new country with a whole new area, and it's incredible in the amount of growth that you've done
Yeah.
since then. It's inspiring.
Yeah. I mean, sometimes even we don't realize. I mean, my wife and I, we don't realize how much we have accomplished. When we came here, someone told me a new word that I never heard before in my country. It was net worth. I said, "What is net worth?" Right? So, oh, they say how much, how wealthy you are. I said, okay. So my first personal financial statement, I remember clearly when I did my first financial statement. We did financial statement. I got my pay here in the US. I mean, this was like first few months in the US, right? Working, and my pay was just enough to fund my family, right? Just you get your salary, everything's expense out, and we do get stock options. So once a year we sell stock option, we get like 30, 40,000. So that's the savings. And then when we fly back to see our family, that savings gone. So we never had any money left on the net worth. So the only net worth I saw was like my house when I bought it when I came here to the US was like 440,000. And by the time 2 3 years later, 2010 20, so like went up to 50,000. So oh, okay, so my net worth is 50,000. So when I put my FFS, it was like, wow, this is 50,000. That seems to be little, right? So I was like, okay, so that was my revelation about what is a meaning of wealth. So
It's huge.
yeah, this is an interesting exercise when I put my PFS together as an employee.
Well, and you don't. Those are things that you don't need to necessarily even worry about or think about because
Hmm.
you're concentrating on the employer role, creating the company, making sure the company's profitable. But then when you focus back on yourself and how you can fund more properties and qualify, that's where that comes into place. Now you got to educate yourself, and it's like stair stepping because then you're learning to underwrite, you're learning to markets, the because it's constantly learning with real estate to get it to the next level, and
Hmm.
you've propelled and accelerated on different aspects, and it takes a lot of time, but you have to entrench yourself. Can you tell us how you found the time to learn the industry and learn the industry well enough to be able to scale so much?
It's so real estate is basically one of the best tool. In fact, I would say that, I mean, from what I know, right, it's the best tool to create wealth because you can learn the whole thing yourself, right? I mean, I used to listen to Bigger Pockets podcasts, right? They when they started, they had like 120 podcasts, and every lunchtime I used to listen to them, and there's so much of nuggets that's being thrown out in the Bigger Pockets podcast. When I started, and people talk about wholesaling, I say, wow, there's wholesaling. You can just assign contract here and there, and you make money in between. Wow, that's cool, right? I never heard about that. And then people talk about direct mailing, and people talk about why mailing, right? So people talk about you finding directly to the seller, motivated seller without the agent. I said, wow, all this exists. I didn't even know that, right? So there's so many tools that you can make money in real estate by skipping the middleman, right?
Yeah.
Right. The wholesaling is a big concept. The contract assignment is a big concept. Um, and also like just direct mailing and finding a distressed buyer and multiple loans option, right? You can do a hard money loan, and we can do a agency loan on a single family house. It's called double closing techniques. All these techniques I learned from Bigger Pockets, right? Just listening by
Nice.
podcasts, right? And even like this podcast, right? Somebody is going to take some nuggets, but there are thousands of podcast listeners out there, but how many people are taking action from it, right? And
Yeah.
implementing something? How many people have that desire to do something from the information that's being given by this podcast, right? That makes a differentiation between somebody who's like hungry and want to succeed versus somebody who are content with life and do not want to take risk. I mean, of course, with all this, you need to be able to take risk, right? You need to have entrepreneurship inside you
Yeah.
and need to be able to take risks. Otherwise, nothing will happen, right? So yeah, by taking risks, by learning techniques from other people, is how I propel into real estate, and we own so much asset right now. And of course, building trust, relationship, taking care of your reputation, all that matters.
Yeah. Yeah, there's a good line that I was told. Your will creates the actions for what you desire, and just like you listening to podcasts on your lunch breaks, it's what are you doing on your time, your downtime? Are you watching TV, watching Netflix, or are you leveling your knowledge up to be able to get to the next level, or even driving to and from? How are you spending that time? And
Hmm.
that time compounds over time. It's a
Correct,
part of it.
correct.
And it comes when you've got responsibility like you do to others that are relying on you. It's a you have to, in a way, educate other people on what is up and coming, what even tax benefits,
Mm,
depreciation, learning that whole aspect of the business. It's um it's an ever evolving, ongoing deal.
yeah,
Um,
but I also believe that it depends on how hungry is that person, right? A lot of people in this world are not hungry. People are content with their
right.
life.
Yeah.
People are content with their jobs. They don't have to do it. It's okay. There's nothing wrong. Just how they are, how they are, right? How they are. What's their belief system and all that, right? So if you look at me, I'm an immigrant here. When I came, and we don't have anybody else. We don't have any other relatives. So I know either I succeed, or it's going to be really looking bad for my kids and for my family, right? So we have to succeed. So the mentality is different, right? We have to succeed. There's no choice, right? and
100%.
and and in the US, there's so many tools out there to really succeed if you are
Yeah.
willing to work hard and do it. So it just, is a do or die kind of situation.
Yeah.
But
Yeah.
you need to have that burning desire inside you to do it, right?
Well, in real estate, you can learn it all, and you can have a lot of knowledge upstairs, but then there's always, you have to get into the right rooms in order to expand. You have to have
Mhm.
relationships, key relationships. Can you touch on how you got into to certain levels through relationships? Was it mentorship? Was it masterminds? Did you what avenue did you take to help
Yeah, I
propel
had
yourself?
like six different mentors, right? Mentors from raising capital, mentors from underwriting, mentors from walking the real properties and showing me this is wrong on the property. So I have like six of them, six or seven people out there. In fact, now I still have mentors.
Yeah,
Yeah, I think it's really good to have mentors. It's just that the mentors are my mentors are most of them are not the guy who's like on the stage selling some courses. My mentors are real guys who are doing things,
yeah,
right? Guys who are doing real asset management. When I walk with this mentor, he can tell you everything about that property, right? Rather than telling me very high level, he tells me exactly this is wrong, this is wrong, this is wrong. When I'm raising money, the mentor who's teaching me have done capital raising for a long time, right? They can tell you human psychology, how to present something, right? And also mentor in thought process, right? When you talk to someone who has done it, who have done lot bigger deals than you, they can tell you things that you have never thought about, right? It opens
yeah,
up your mindset. Oh, you can do that. Oh, you can do that. Oh, you can buy $80 million deal. Oh, you can do $50 million deal. Why am I doing single family homes, right? So these are revelations you get when you talk to people who have accomplished it, right? As I said, unfortunately, a lot of them are not guys who are on the stage selling things. So talking about multifamily, a lot of them are individuals who you'll find in different places, and you get attracted to them, right? There are certain people who are destined to be connecting with you to teach something in life, right? So
yeah,
you have to just find that people, and that people may not be asking money from you. They are willingly want to teach you things, right? But the thing is, first thing is you have to be the one who is seeking their knowledge, right? You need to have that burning desire,
yeah.
right? If you don't have burning desire, nothing works, right? So right, nobody want to spend time with somebody who's really not excited um, to break out from their life.
That's awesome, and yeah, seeking guidance because somebody else has already proven the path. They've been there, and they're being guided by somebody else who's been there as well. But there's an easier way to do it other than on
Hmm.
your own and figuring out how to get there. And
Yeah.
it's finding those relationships, finding out how you can add value to those relationships because you're right,
Hmm.
they don't necessarily need money, but how can you add value into their operation in order for it to be a synonymous relationship? one's trading time for to give knowledge, one's wanting to acquire knowledge. It's finding those people along the path and
Hmm.
um, getting there. That's huge. And then getting
Yeah.
in the rooms, conferences, building trust. How would you build trust with investors? Getting out there and finding people that can join you on your deals.
So we have created this, a good investor base. I mean, we have raised almost $80 million just by myself, right? Just me myself. I don't have a 10 people group or 20 people group and doing capital raising or what, right? So the way we did it was very simple, right? Even without any deals, we always add value to them. We always educate our investors, right? And building a list, building a investor base, building a fan base, and consistently giving value to them is important. Whether they invest with you or not, it doesn't matter, right? So people can see through two things: the rich investors, not the normal investors, okay, not the one you find in Facebook or not the one you find in meetup or conferences, right? They are like the rich investors who don't come to these conferences, Facebook and all that, right? They want to trust someone, right? And the way they build trust is basically they see who's giving value. So two things they will look for, this rich investors. Two things: one is they see whether this person knows what they're talking about, whether they know the numbers, because rich people's, they can read people very quickly right?
Yeah,
Not the trust fund babies, the people who made money, right? People who made money by W2 job or by being a doctor or being a lawyer or what. I mean, there's certain skill to them that they have learned on how to identify people, right? So they can see who knows what they're talking about. Second is they see who is like really being sincere in adding value to them, right? So that's how we did it. Even before I raised big deals, I used to do a lot of webinars for a lot of people. I just call, hey, let's come on webinar like this Thursday. We have a webinar. For tomorrow we have a webinar for tax webinar, what to prepare for before the year end. And I usually have like 500 people attending that webinar,
wow. That's
right?
and you're giving knowledge. You're passing it
Okay.
along, and then
Yeah. And
if they take something away, it could
there's something
change.
way. Yeah, I mean, it's basically it's a voice, right? Like when you do this
Yeah,
podcast, a lot of people listen to your voice, right? And that voice builds trust, right? And you're doing this for free, right? Podcast is free. Everybody can download. I mean, you don't have to really do this, right? You're taking up your time, arranging your time with my time, and doing this RE stream. It's expenses, but you're doing it for free, right?
yeah,
So people see that as a value that you're giving, right? And we're doing another webinar on next week, which is basically webinar on economy, right? I'm calling a chief economist, and
yeah.
there'll be another 500 people attending.
That's
So,
incredible.
so by adding value for free, people see, okay. I mean, it's basically a trust building tool, but at the same time, you do it sincerely, right? We
Yeah,
don't raise money from any of these webinar. We do that separately. And we don't hope that people are going to come we just want people to learn, right? And whenever I go for conferences and anywhere I go, people have come to me and people have touched me and say that, hey, I listened to your podcast. Your podcast saved me this much on this deal.
yeah.
And that's the big fulfillment that you get, right? You have
That's
changed my life. Your books have saved me 25,000 going rather than me going to this join this mentoring group, which is going to give me little information. I just bought your book for what, $20 in Amazon, and I got this more bigger value, right? So just by adding value to people, and that's how you build trust. It's a long-term game. It's a long-term marathon,
yeah.
right?
That's
So that's
incredible.
how we do it.
So you're an operator. You're a full fledged operator. You're vertically integrated. You raise capital. You find deals that
Hmm.
pencil out. You underwrite them personally, and
Hmm.
then after you've closed, you roll your sleeves up, and now it's time for the business plan to start getting executed. What are you seeing through the past 2 years up to now? What are you How are you seeing the market, the dynamics?
I think the market before COVID was really good in terms of rent growth was modest, right? And there was no cash act out there, right, for multifamily, right, where they limit how much notice to vacate you can give to the residents. Once 3 days they don't pay, you basically give them notice to vacate. But COVID messed up a lot of things, right? First of all, I mean, COVID was, you know, it happened, right? But and the government did come and helped a lot of residents. So two things that created issues in the market, which is I think is going to be an issue for next few years, is basically one is the government, because they were funding so much to the residents, it has trained a lot of class B and C residents not to pay rent because
Yeah,
they get this all this free money, right? And it become like a side income for them. They really used their current pay to do other things. So now when all that assistance is gone, a lot of residents are having difficulties paying. So you'll see in general you see higher delinquency now, right? Across, I mean, I'm talking about state of Texas, right? Higher delinquency across the country, because across the state, Texas, I believe it's probably happening around the country. High delinquency, people are trained to not pay rent or slow down on paying rent. They find reasons not to pay rent. So that's one thing that is happening. Second thing is there's some law that was remnants of COVID. For example, any loan under the Freddie or Fannie Mae agencies, you have to give like 30 days notice to vacate instead of 3 days. So that was during COVID. Now COVID is over, but the law is still in effect. So what that happened is, it broke the discipline that the resident had in paying their rent, right? Usually every monthly they pay, and if they don't pay within 3 days, we give them notice to vacate.
yeah.
They pay. Now that 3 days has become 30 days, right? So what's happening is sometimes they fall behind and they say, oh, it's okay, I got 30 days to pay, and come 30 days they have some other issues come in. Now it becomes 60 days, right? So a lot of evictions and delinquencies are happening because of these two things. So it's much more harder after COVID.
That's So those are still in effect for Texas. That's wild. Because here outside Cincinnati, it's been um, I mean, it's been, I'd say, back to normal for a little while.
Mhm,
I say that lightly
mhm,
because we're in workforce housing, so we have to collect. I mean, it's a part of it, but
mhm,
to have laws still restricting that and holding that back in place, I mean, it doesn't surprise me, but it's
mhm.
wild.
But do you have agency loans on it, or bank loan, or what kind of loan do you have?
Just bank loans. So as
Okay,
far
bank
as
loans is different, right? So these are agency loan, Fannie and Freddie Mac, which is
yeah,
larger deals,
yeah,
more affordable. I mean, not affordable, workforce housing too, but they still have that requirement for 30 days notice to
that's
vacate
interesting.
here.
I know
So,
FHA. People, I didn't know it. FHA, there were still next month is going to be the first month that people are required to make their house payments from
oh,
companies.
really?
Yes, I didn't know that that was even still a thing. So that's another dynamic that's going to be hitting the market is that there's a lot of people that were
Correct.
still in forbearance from paying their
Correct.
mortgages.
Oh,
So
really? I
they,
didn't know that. Yeah. Even the student housing, right? It was only 2 months ago. I mean, only last month, people said, government said, okay, now you have to pay. So now, like, people are like, getting back to reality now. So
yeah,
it's a lot
well,
more harder after COVID, just because you have trained that resident base by law
right.
to not be disciplined in paying their rent, right? So I would say that's our experience as an operator. I'm sure you would have never heard in other podcasts, I guess, right? People, I do not know, but
But those are the
people don't talk
struggles.
to
I
that
mean,
level of detail.
yeah, those are the that we're in the essentially the armpit of the business, which is fine because we ultimately we can control and push the asset to peak performance, and you kind of have to sit in that wheelhouse in order to make it happen. But we're privy to information that it's not there's nothing sugarcoated. It's not there's nothing fun about it, but it happens.
Hmm.
That's where the laws come in and make it tough to make us allow us to do our job too and collect
Hmm.
effectively. Um,
Yeah, I mean, it's not good for the residents too, right? I mean, why you want to get evictions,
right.
right? So why want to fall behind? I mean, it's the law has already been there to give them consistency, right? It trains them to pay on time, and landlord benefit, residents benefit. But now, because of this law, it just breaks their discipline in paying monthly, right?
Yeah.
So that's the biggest issue that I see right now. On top of the rent growth is negative, the valuation is lower, and liquidity is harder now, right? Just because of the way Fed has increased the interest rate right now.
Yeah. What are you seeing the Fed doing next year with interest rates?
Um, I think hopefully they're going to be cutting the interest rates, right? So, but I think it's not going to be, it's not going to be like 2 years ago, right? It's still going to be like, for example, I think the interest rate right now is like 5.25, the SOFR. This is for bridge loans, right? So it might come down like maybe 3 maybe like 0.25 basis point, like three times, I guess. Still not bad, but it's not coming down to like zero as what it
Yeah.
used to be, right? So it might take a couple of years to get there, but it's still going to be on the right direction. However, all the operators, a lot of operators who bought in 2021 and 2022 on a bridge loan, they bought it at a market peak, and they use this bridge loan, which has a short time period. Even though they have a rate cap, right? It's still they have to get out within 3 years, right? And that's going to be a big problem. A lot of investors, a lot of operators who bought these deals are underwater. Not only even on equity, they're underwater on the loan, right? So, like in Texas, we are seeing deals which used to be trading 140 a door. Now it's like mid 80s a door.
Now,
So that's like,
now you know where the glass ceiling is at. So it's
yeah,
you got $50,000 of equity sitting out there, and I,
correct, correct.
that's wild.
So, but the thing is, this is a true definition of a market downturn, right?
Yeah,
Because liquidity is tight, institutionals are out, investors are scared to invest money into existing multifamily. In fact, a lot of them are just hoping to get their principal back.
yeah.
So, this is a true definition of a down market, right? Um, where people can't just come and sweep a big chunk of these deals, right? So I would say we are at the bottom of the market. This is my perspective. This is the bottom. Next year, we'll start seeing prices increase again. Sentiment would become better. It's also election year next year,
Yeah.
right? So people have to feel good, I guess, right, for the election, right? Apart from what the Fed is going to be doing, whatever
Yeah.
news there. I mean, just. So I think 2026 will be a really good year
Yeah.
for real estate again.
You're definitely hitting it. I was on a webinar last night, and they're saying the next, let's call it 12 to 16 months, is should be a massive buying opportunity, and
Mm,
it's you can kind of see it. You can see where people were buying in sub fours, sub threes. You've got debt issues, debts that are coming due. But at the same time, you've got downward pressure on with rates, liquidity. I mean, there's so many dynamics. So it's like, yeah, there's great buying opportunities, but you still have to be able to close. So
mhm.
retail investors are hesitant, of course, because they've got a lot of cash tied up in some of these deals. But what are some different avenues that you would suggest to kind of fill the gap with equity? Is it fund of funds or some other tactics?
No, we still have retail investors. I mean, I've not raised any money recently for multifamily assets, but I still believe I should be able to raise money if I need to. I mean, for me, the raising money is not the big thing, or my investors not. For me, I need to feel really good when I see a deal.
Yeah.
I need to really see a deal because for me, it's not important to do another deal, right? I mean, we have done a lot of deals. We have the money we want, right? But I think it's more of a hunt for the deal is important.
What are you looking for in deals? Is it median household income, and then grow off that, then cap
So,
rates, cash?
so we are looking more for like class A's nowadays because as I said, we are doing a lot of ground up construction. So we are so used to new designs. It's a bit hard for us to go back to class C and B,
Yeah,
right? Because as I said, we are doing every day. We are looking at a design of a new exterior of a brand new class A. So we're looking more for class A's, but good deals, good upside, good loan, of course, right? And something that we're excited about, right? Where there's not much supply coming in and all that. So, as I said, but the thing is, I'm not really looking yet. I mean, I'm just for me right now, heads down, focusing on my current 7 assets that I have.
yeah,
The good thing is we almost all of it is fixed rate loan, except for one on a bridge,
that's manageable.
and a bridge. Yeah, we're still manageable compared to a lot of people out there. Everybody's on a bridge, right? So, well, not everybody, a lot of them on a bridge, right? So we made. I mean, I'm happy that we made good decisions 2 years down the road that to do a fixed rate loan
Yeah,
where everybody was saying, it doesn't make sense. Why are you doing fixed rate? Why you need to pay defeasance? Why you need to pay prepayment penalty? In fact, a lot of podcasts declared that who does fixed rate loan? Fannie and Freddie Mac didn't have business 2 years ago, right? Everybody is doing bridge loan, right?
yeah.
Now it's the opposite. Now they realize, oh, okay, so So for me, it's not the economy that is bad right now. Economy is just doing fine. The Fed is doing what they're supposed to do,
Yeah.
right? I think it's the decisions that were made 2 years ago, 1 year ago, were wrong by a lot of people.
Yeah.
A lot of people took bridge loan for a stabilized asset to do a deal, right? Otherwise, you will never able to do it, never able to be able to do a deal. They can't do a deal with Fannie and Freddie fixed rate because they're going to be giving 55% leverage because the NOI is not there. So they started doing bridge loan where we get 75, 70% leverage, right?
Yeah.
They can do the deal, right? But they also use the wrong loan to the wrong deal. So whoever made that decision 2 years ago, whoever made all the wrong decisions, is they're going to be suffering now, right?
Yeah.
Um, yeah. So I think it's not the economy, it's not the Fed. You can't really blame them. It's the wrong decisions made by purchaser of this asset, matching the right loan because Fannie and Freddie was always there. They are true lender for true NOI,
Yeah.
right? Bridge loan is for future NOI, right? But you have to buy a really really deep discounted, deep value add to use a bridge loan. But everybody is using bridge loan for stabilized asset.
Yeah, and for the listeners, Fannie and Freddie, that's a GSE, government sponsored entity. They lend only on multifamily, and that's one of the superpowers to
Mhm.
multifamily is having um, that
Exactly.
amount of liquidity on a massive scale available. Um,
Yeah.
and
Hmm.
I mean, just purchasing on a future value on if you purchase this asset, it's worth this if you get the cash flow, if you raise the rents, if you do the renovations, and they're buying on a future cash flow based on what the property down the road was already doing. And thank God I didn't partake into that because I couldn't make sense of it. And it comes to common sense. Why would I buy this business for a future value today? It's not worth that today. And it was extremely hard to find deals, extremely difficult, discouraging. Um, we're getting deals now sent over that are underwriting, but you've got changing of the tides too. So now it's what does the debt look like? So now you've got raising interest
Correct.
rates. It's
Yeah.
it's a tug and a pull because you kind of know where it's going to head when times go back to being good 2026, 2027. um, but
Yeah.
it's being able to weather that storm too, and that's through cash
Yeah.
flow. So
Yeah. And I don't believe. I mean, I know you're saying there's going to be a massive buying opportunity. I still think so, but not for the syndicators,
no.
right? I think massive buying opportunities for family
Yeah.
office, for institutions who has a lot of liquidity and they have the patience, right?
Yeah.
Syndicators need high leverage because they have equity limitation, right? How much equity can they raise? So syndicators, a lot of them are going to be still struggling, but all this family office and institutional, they are going to make a killing out of next year
Yeah.
from buying from either from the bank or from foreclosure or directly from a lot of less sophisticated operators.
Well, yeah, and to that point, a lot of these family offices do want skilled operators as well that can take the asset and make sure that it performs through the
Hmm.
next market cycle. So I think it's
Yeah.
definitely we're in the year of the
Hmm.
operator moving forward because how we manage our assets and how we push performance um, is going to be a superpower that we bring. And just having control of the performance versus relying on third party um, is it's a huge
Yeah, it's
advantage.
very hard. Yeah, that's why we always do vertical integrated
Yeah,
management, right? We manage our asset also because we do difficult deals. Um, and that was one differentiation on our growth as well. We didn't do the deals that is easy. We did the difficult ones, and we executed very well in value add program, and we also exited at a great time last year. So that helped us a lot. Even though we still have half of our asset, but the exit helped us take out all the smaller assets, the non-performing assets. Right now, we have much larger, better performing assets during this downturn, right?
that's
So
well,
that was another decisions we made last year, which I think was a key decision.
and those are the assets that you created probably a substantial amount of equity on by doing the
Hmm.
the hard deals, doing the hard lifts, the deals that
Yeah,
nobody wants to do. But if you do them correctly, it's rewarding at the end. It's
correct.
not rewarding going through the process. So I know that.
Well, I mean, if you want to build wealth,
Yeah.
right? you have to work hard, right? I mean, as I said, we started with 50,000. So
Yeah,
I say my first PFS was a surprise. I was a revelation for me. 50,000. Okay, something called wealth, something called net worth. I never heard about all these terms until I started doing my PFS and finding out what is it and all that, right? So um, I think it's okay to work hard in the beginning doing difficult deals. Just people just don't want to do it, right?
yeah,
As I say, it's all come to your burning desire. How much, how how hungry you are
yeah.
in succeeding.
Yeah, that's 100% it. And then, of course, proving when you have partners that trust and believe in you, it is proving to them that you are who you say you are and you can do what you say you can do, and that
Hmm.
helps. That truly helps. It is a tap on the shoulder, and properties perform, in my opinion, better because you can get really comfortable at your where you're at personally, and if you have someone else that is just there, it helps you perform a little bit more. And I've noticed that
Oh yeah,
about us
absolutely,
too.
absolutely.
Um, on developments, if you could just touch on this, what is your all's typical process when finding the right market, and then if it's feasible?
So market wise, we just looked at our own market, our own backyard, Austin to San Antonio, which is we already in a really good market already. So I really don't have to go anywhere else. Of course, job growth, where development is happening. We don't buy land in somewhere in the middle of nowhere or where it's not part of growth, where very less people living. We don't do that. We do where where we are certain that it's going to be people living and all that. So we don't take that kind of risk. So yeah, when we do, we look at, of course, household income, whether there's growth, whether the land price makes sense, what is the rent that we can get, what kind of product we can do, and all that, right? So we are designing our own product type right now, which is which will give us what we comfortable as an operator. We know what residents like, what kind of product that people are looking for nowadays. So we design that kind of products in our current construction company.
Yeah, everything's brand new. That's delayed gratification as well. The process of going
Hmm.
through the development is getting all the approvals and everything else. I mean, it's design phase, engineering phase, architect, getting a working set of
Hmm.
drawings, a grading plan. I mean, it is excruciating, but once that thing is brand new, built, it is extremely gratifying for sure.
Oh yeah. It's a delayed gratification. Exactly. There's no cash flow. You're just burning money for 2 years, right? So
Yeah,
2 or 3 years, you're just burning money, and when I'm gonna get this, right? So, but once it comes, we'll be really
yeah.
happy.
Once you're done, it's institutional grade, and man, it's the sky's the limit. Um,
Hmm.
for the listeners tuning in that could be just beginning out in their real estate investing career, they're not really sure about which direction to go, whether they want to
Hmm.
start with single family or do some flipping, wholesaling. How would you suggest them get started and to take action to learn more?
I would say you can start with single family, or even wholesaling, right? It's nothing wrong. All these avenues is where we started. I tried wholesaling, it didn't work out, but I know the concept very well. Um, but I started single family, learned the basics of real estate. I know a lot of gurus out there say that why are you doing small? Go direct to multifamily, right? But like you're skipping elementary school, you go direct to middle school or high school, and you're gonna be skipping some math expert there, right? Expertise there, right? You want to start from younger age, right? So I would say start from single family and move up. I would say, um, yeah, or start from smaller multifamily, but still, I would say single family would be the best option.
Get the experience, learn how the process goes with closing, and
Hmm.
all the people that count on
Hmm.
you to close, and
Yeah,
it's good.
I mean, even selecting residents, reading a lease. How many operators in multifamily knows how to read a lease?
Yeah, that's true.
Right, a lease is your biggest contract with you and your
Yeah,
residents, and that's where you are basing your entire pro forma, right? And if you do not know how to read a lease, if you do not know all the caveats in the lease, how are you gonna operate during difficult times,
yeah, yeah,
right? Like for example, I talked about notice to vacate 3 days, 30 days, and how many people knows about that kind of deals, right? If they are not managing the assets themselves, or they've never done, tenant relationship when they're doing single family, they may not understand the difficulties on the resident side, right? So yeah, all that's become key when you starting from small.
What is your position on the emotional support animal?
Of course, we allow them, right? Even though there's a lot of fake,
Yeah, the fake
uh,
doctor's
fake,
notes.
uh,
Yep.
fake doctors. Yeah, yeah, correct. But we have another. I think there's a new program now where we can verify whether they're
Yeah.
really true or not, right? But all that you can't really do much. You play within the law, right?
Yeah.
So try to do that.
Well, it's just the type of dogs or cat. Well, more dogs that they consider emotional support, and
Yeah,
it is what it is. But yeah, that's a slippery slope.
yeah, yeah. We don't try not to go into that kind of deals. We just follow the law and just do what is right.
That's all we do. That's all we can do, really.
Yeah,
But James, truly appreciate you coming on. If a listener wants to get a hold of you, learn more about your company, possibly invest with you, how can they get a hold of you?
yeah. My website is Achieve Investment Group, ACHIEVE, achieveinvestmentgroup.com. Come and sign up to my newsletter. We have like 5,000 people reading my newsletter every week. So
That's
it's
huge.
definitely there's a lot of info in it. It's not a general newsletter. It's very customized.
Yeah,
It shows what we do and all that. So come and join our newsletter. If you want to be in part of my investor list in the same website, there's an investor login. But once you come to my newsletter, you should be able to see all my deals because we do a lot of 506C offerings,
nice.
and it's open up to everyone, I guess.
That's awesome. Very good. Definitely appreciate your time. I look forward to following you, and
Oh,
we will certainly talk soon.
awesome, Josh.